I just sold $93,000 of one stock in the portfolio, and I bought $153K worth of another stock in the portfolio going into earnings. I'm gonna talk about where the market is headed, what the inflation data coming out Friday could mean for the market, and where we could be headed from here. But remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now let's go ahead and dive into the portfolio. As you can see, we are trailing up near all-time highs. And if you do want to see me hit my 8-figure goal and follow along that journey, be sure to be subscribed to the channel by clicking the subscribe button down below. And if you get any value out of this video, I would highly appreciate you hitting the thumbs up button for me. I appreciate you being here. Now, let's go to the realized gain loss for the day, because I do like to be transparent with this and show exactly how the performance is. Now, we profited about $1,554 and I closed out one position. Obviously, results vary day to day in this portfolio. Now, I do give away free trade ideas on my Instagram, on my new X account. So if you aren't following me there, be sure to do so. That will be down in the description. And also, if you get value out of this video and you want to work one-on-one with me and join my private mastermind with over 454 clients, that'll be at the top of the description below. I have a free training here, as well as all our client testimonials, which I upload on a weekly basis. So be sure to check those out. But let's go ahead and jump straight into it, okay? The government shutdown is still underway. Now, I thought we weren't gonna get the core CPI inflation data that was supposed to come out on Friday, but the Bureau of Labor Statistics just announced that they will be publishing the Consumer Price Index, or core CPI data, on Friday, October 24th at 8:30 a.m. Eastern Time. This is a huge deal for interest rates. The Federal Reserve is meeting next week and making the decision on if they're going to cut rates or not. And that is really going to either propel the market forward and upward, or we're going down from here. So let's go ahead and dive into that. I do want to talk about, on the economic reports next week. Okay, we also have some big things, right? FOMC interest rate decision on Wednesday. So that could bring some volatility into the market. And then we have core PCE data on Friday. Okay, so just back-to-back economic data and earnings. Okay, so we've already had some earnings underway, but let's take a look at the CME Fed Watch tool. This is what I look at on a weekly basis to make sure we are still getting interest rate cuts. Because if we are not, if the Fed decides to raise interest rates, I'm going to be getting out of many positions in my portfolio. But as you can see, we are in a bullish market. We have interest rates coming down and fueling that, because businesses and consumers are able to borrow at cheaper rates. And when that happens, more liquidity floods into the stock market, and it looks like a 96% odds we are getting a rate cut next week. So that's very good. Odds are still extremely high, and this tool has been right 100% of the time going into an interest rate cut if the odds are above 55% the week of the interest rate decision. Okay, so since 1998, this tool has been 100% right 100% of the time. So 2 rate cuts for this year, and it looks like we're getting a few next year. So that's very bullish, which confirms my bullish stance on the market and why I'm so aggressive. But let's talk about earnings, okay? Because we've already had some big earnings come out. Netflix was yesterday. Tesla was just today after hours, and I'm going to kind of dive into that. But we have a lot of earnings coming up, and dependent upon how these companies perform, that could lead for the stock market heading higher or heading much lower from here. Okay, so let's talk about Tesla. Tesla just announced they reported revenue growth of 12% after 2 down quarters in a row. So that was positive, right? The stock fell about 1.7% after hours. So I guess the estimates kind of came in line. Let's see, earnings per share, 50 cents adjusted versus 54 cents. So EPS came in a little bit lower than expectation. Revenue came in higher than expectation. So I'll call it kind of flat for Tesla, okay? Not super bad, but not, the best earnings we've seen out of them, okay? So that's Tesla. Now Netflix, okay, earnings per share, $5.87 versus $6.97. So again, did not meet expectations there, but revenue came in kind of right in line. And Netflix did see kind of a downturn in the stock because of this. And their forecast for future growth is 29% because of some issue they're having in Brazil, okay? So, not the most stellar earnings out of two big companies, but we'll see next week. We have a lot of earnings on the table. Let's dive into the markets, okay? QQQ kind of bounced off this 613 area this week, and it could not break above, okay? With that being said, I think we get a little bit more weakness into this week, all right? Maybe a couple more down days, all right? Which would be a great opportunity to kind of load up for earnings next week, and that's what I did, okay? VIX, the Fear and Volatility Index, I use this every single day. This determines how much cash I'm going to have allocated to positions and how much I'm going to have on the sidelines. Right now, okay, I went almost not all in, but we were very low on cash on the last video on Monday when the VIX spiked to 29. Okay, I allocated a lot, but now we're back in this zone of close to confidence and greed. We're back under 20. VIX is at 18. There's still slight fear, but we could either, again, see this go a little bit higher or a little bit low or a lot lower. And that would indicate if we go lower, the market is probably headed higher, but that's when I'll start shoring up a lot of cash. So today, what I did was, let's take a look at the VIX cash allocation levels. As you can see, we are here between VIX 15 and 20. So there's slight fear in the market, but we're going towards that area of potential greed if we could get this market to break through the 613 level on QQQ. So what I did was I said, hey, I'm just gonna free up some cash because I was heavily invested. I had about 11% just the other day. So I took off some positions. I actually sold one big position, which I'll go over, to free up cash. And I'm about 19% in cash right now, which is kind of right in line with my VIX cash allocation. And this is where I feel comfortable because if we do have another VIX spike, let's just say this thing spikes back up to 25, 24, okay? And the market, the market kind of tanks down to this 594 level on QQQ, I want to be ready to buy that dip. If it heads lower, okay, I want to be ready to buy that dip. And in order to buy the dip, I have to have cash on the sidelines. So that's why I'm about 19% in cash right now. And, I think we're probably headed a little bit lower in the short term. And then if earnings come in really good, I think long term, in the next 3 weeks, we're going to head a lot higher. But some earnings do have to kind of be announced, Meta, Palantir, SoFi. I think those are going to be all big ones. Amazon, right? So we'll see. We'll see when those come in. Tesla, kind of flat. Again, not signifying a lot of growth here out of the Mag 7. So we'll kind of see where we go forward. But I do want to talk about the one stock that I purchased a lot of today going into earnings, and that is Celestica. Celestica is one of the only green stocks on my list today. Most stocks were down, right? Celestica was pretty flat. In fact, it finished about 2% up today. So not bad compared to all of the other stocks in my portfolio. All right, now they just came off an increase in their ratings. RBC Capital maintains outperform rating on Celestica following strong Q2 results. And then also they just released a new family of data center switches. Okay, so all of these companies that are building out data centers and scaling quickly are going to need to utilize these latest switches that Celestica offers to keep up with demand and just computing power. So that is a huge revenue generator for Celestica. I like that. So definitely not bad, and that could be a catalyst for hundreds of millions of dollars going forward. Now, if you look at the chart on this stock is one of the most beautiful I've ever seen in the portfolio. And as you know, I love to trade stocks that are upward trending for at least the past year and a half. It's much easier to sell options and collect premium on stocks that have very beautiful upward trending charts, and Celestica meets that criteria. Another thing is that they have a pretty low PE ratio being in the AI space. They have a PE ratio of 57, which is right in line with NVIDIA, Taiwan Semiconductor, and those big behemoths. Now, this is a small company. This company, if we go back to this page, we could see that their market cap is only $31 billion. And I do believe this can be a multi-$100 billion company, considering that they manufacture much of the data center equipment. Okay, so I really like Celestica here. It's kind of in line with one of those value stocks. PE ratio is a little bit lower. I'm not trying to trade stocks right now that are too high in the PE ratio, just given where we are at in the markets. That's why I'm looking to add positions that are more value type companies, but paying out good premiums. So with that being said, okay, this thing went all the way up to 296 just the other day, and now it's at a nice little discount here. If we just take a look, let's see, from all-time highs. Okay, we're down about 9.5%, so not bad there. Now, let's take a look at the portfolio to see what I did. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we take a look at the account, you could see that my current Celestica position is now 157K, all right, in cash secured puts for earnings 9 days out, to collect about $5,964 in premium, okay? So I prefer selling cash secured puts, and what I did today was, hey, I went 9 days out, all right? The expected move is about $40, so this thing could go up to potentially, what is that, 310, and it could go down to about 230, okay? So with that being said, I said, hey, I'm gonna play it safe. I'm gonna go to the 230 strike, collect 300. I actually collected, let's see if we go down here, the 230 strike. So today I collected about $600 in premium on that, but as of right now, it's a little bit lower because the stock headed higher, okay? So if I were to do the same trade, I'd probably just go up to one strike, 232.5, collect about $500, which is a potential 2.3% ROI in 9 days. That is absolutely insane. I like that risk to return profile. Obviously, results vary based off of where the stock is trading, but I do like that strike, okay? So 230, 232.5, I feel pretty safe there in 9 days. And if we go to the chart, okay, I'll show you kind of where exactly that is. So if we go and just see from all-time highs, and we go all the way down to 230, let's just say 232.5, okay, that's roughly 21% down from all-time highs if they did have lackluster earnings or earnings came in less than expected, okay? And I would be happy buying it at that discount. That's why I went down there, okay? Now, I don't expect them to go all the way down there, but just in case they do, I'll be picking up the shares at a 21% discount, and that's why I trade how I trade. So that is a wonderful stock in the portfolio. Been playing this for quite a while now, and I continue to size up my position going into earnings. So definitely one of my favorite stocks in the portfolio for earnings. Now, let's talk about the stock I sold, okay? Let's talk about it. It's American Express. So American Express, we had a $93,000 cash secured put position. Earnings came in stellar, okay? PE ratio on this stock is 23, super low, lower than the S&P 500, and they're having double-digit growth, okay? This is the type of company that I like to be in. Now, I'm gonna go over the highlights of the Q3, and you're gonna wonder why I sold, and we'll get into that. But basically, their earnings were phenomenal, okay? Revenue growth, 11% on a credit card company, okay? EPS of $4.14, up 19% year over year, double-digit growth. Raising forward guidance to 9 to 10% revenue growth for future quarters in 2025. They just refreshed their business platinum card, which is huge. And since 2017, they've increased their merchant locations by 5x, okay? So this was huge because their platinum card that's really their main source, I would say, of recurring revenue because they charge, I believe it's like $695. I don't know how much I pay nowadays. They probably upped it on me. But as you know, if you have a platinum card, we pay annual recurring revenue to Amex to just have the card, to have the privilege of having that card in our wallet, okay? $530 billion in annual billings just from the platinum card. That's insane, okay? They just they just refreshed the platinum card. Now it's a mirror card. I didn't get it, but I know a lot of friends did. So new account acquisitions, they increased by 2x, okay? 500K in mirror form factor requests, right? And then, just more active members, 45% increase in high yield savings accounts. The company is crushing it, okay? The company is crushing it. So why did I sell it? Okay, why did I sell it? Now let's take a look at the chart, all right? I was selling cash secured puts on this thing when it was down here at the lower Bollinger Band, around 320, okay, around here. The stock has gone up in such a short amount of time, in about a week. Okay, from there, it has gone up about 13%. Okay, this stock is more of a slower mover. And to see moves like this is kind of a stretch. It's kind of a stretch. We're up the upper Bollinger Band. So what I did was I just took off all the cash secured puts that I had. As you saw the profit today, that was from American Express. And my plan is to get back in the stock at better, at a better entry here. So where am I waiting? Well, I'm probably going to wait for this thing to kind of roll over a little bit and get back down into the low 340s, maybe even the mid Bollinger Band, 338, somewhere around here. Okay, that's when I want to be selling puts on this stock again to add it to the position. Not that I'm not bullish on it long term. I think we are headed much higher. I think this is a easily potential $400 stock. But for right now, I want to kind of be in and out, be flexible with my cash here in the markets, because we don't know what the president could announce next week, what the Fed could announce next week with interest rates. They could really send this market on a downward trajectory in the short term. So I want to make sure I have cash available. And this was kind of one of those positions where I was able to take off that cash. So if you enjoyed this video, please give it a thumbs up, and I'll see you in the next update. Take care.